Joining us for our interview this month is Steve Bowerman, who is part of the tax team at AVN Tax. And AVN, of course, well known up and down the country as being an organisation who help firms of accountants, tax advisors, develop their business, but also look into the opportunity of certain tax schemes, certain opportunities, shall we say. And with it being so high profile at the moment with Google and the like, just wanted to have a chat really. So Steve, thanks for coming in to see us today. We've just had Tax Conference as well a couple of days ago as we filmed this, and really notable as I was talking to the people there, some people really don't want to get involved in tax schemes ever. Some people are keen to just go for it and see what happens.
Once the risks of any sort of tax planning are explained, then the inherent nature of the individual comes out. There are those people that are cautious. Ironically, after the comedian GAAR was outed by the Prime Minister, some people did actually say, well, if he can do it, why can't I? Some owner-managers have said, is it just for really big companies? I suppose my company's never big enough to do this sort of thing. But when you explain that, yes, they can, if they're minded. And basically my role is to explain the risks. And I would sooner paint, if you like, a sombre picture than say, yes, go ahead, everything's fine. I don't think I would be fulfilling my role properly, and I don't think the accountant or the tax advisor really would be adhering to the rules of the ethics of their institute if they said, yes, you can do this, just go ahead. I think it's far more complex than that.
So if we sort of work through the process, accountant sitting at their desk gets a flyer through from somebody saying, you know, here's a great scheme, it would work for your clients. What should they do? Sort of work us through it from there.
Right, well, if they're an AVN member, and we'll base it on that assumption, then normally they would contact us and speak to myself or one of my colleagues, Paul Flynn, Ian Patterson or Deborah Lowndes, and they would say, have you come across this? What do you think of it? If it's a strategy that we have looked at, we would be pleased to say, yes, we've looked at that, we've undertaken a due diligence on the provider, it is someone that we would be prepared to work with, and we've now also had access to counsel's opinion and made our observations. The due diligence that we undertake is really quite rigorous, and what we're trying to achieve really, although it's only a snapshot in time and is not infallible, we're trying to find people that the accountant would be comfortable to work with, knowing that they have fully researched what they're doing, there is a counsel's opinion, and that from our point of view, we would prefer any tax mitigation strategy to be registered under DOTAS. If someone enters into a strategy and they might try and achieve success by not fully disclosing, we think that's wrong and is doomed to failure and will result in some severe penalties. However, if it is DOTASable, there is a number which goes on the tax return. The provider of the strategy has let us see the narrative and the full disclosures, which we also think are essential. So we would then give a reserved or guarded opinion as to we think that it's something that the accountant could suggest to their client. If, on the other hand, it's not something we've come across, then we would say to them, well, we don't know the scheme, we don't know the provider. What we suggest you do is ask some crucial questions. How long have they been in business? Have they got PI cover? Does it come with counsel's opinion? Is it DOTASable? And all the other reasonable safeguards they can take. Thereafter, we would suggest, well, if your client is interested, then you have a duty to act in your client's best interest. But you've also got a duty to say to your client, I don't know this scheme, I don't understand it, but if you want to go ahead, I'll help you by arranging an introduction or something like that. I don't think the accountant can just put their head in the sand and just say, well, first of all, there's two things. They can just say, I don't believe in this, I'm not going to do anything. I think we've seen a very recent case, Mr. Majul, where it would be dangerous to do that. I also think that once you are aware that the strategy exists, I don't think you can ignore it and say, I'm not going to tell my client. I think that if your letter of engagement says, I will assist in tax planning, then I think you have a duty to say to your client, I don't understand this, but I am aware that such a strategy is available if you want to go ahead. And I will then help you talk to the right people who can explain it.
2 points I want to raise, and hopefully you can add some bones to this. First of all, I think that an awful lot of people say, well, we've asked the QC a question, now we know it works. It's not infallible. And number two, you have to be careful what you've asked them as well, don't you?
We, in conjunction with the opinion, we ask for the letter of engagement to council, the instruction to council. What has that said? You may find that some council will actually answer questions that are not in that instruction. Some council will actually say, you haven't asked me this, but I think you must consider this. Some council will literally just answer the instruction. But again, something that works technically might not win in court because we have the purposive approach. So you have to explain that as well. But certainly council's opinion on its own doesn't guarantee a strategy will be successful if challenged by HMRC. And again, from the council's opinion, when you read the conclusion, you can sometimes get a feel of what's council saying here. Sometimes council will say it's aggressive, but on a strict interpretation of the legislation, this will be successful. He answers the question for you.
Yeah.
On a strict interpretation of the legislation. And of course, judges now using the purposive approach, PA Holdings is a case in point, strict interpretation of the legislation needn't necessarily apply or guarantee success.
Thinking about PA Holdings, the decision not to appeal that to the Supreme Court in the end, do you think that shows that there has been this sea change in the way everybody's now looking at tax avoidance?
Well, yes, but and before I could answer that properly, I would have to know what the settlement was. Because if you settle and you get a good settlement, why would you proceed to court? Now, it might be that we would love to know what would happen if it went to appeal because of the implications of PA Holdings. The individuals themselves have got to make the decision as HMRC as to what the outcome of any appeal would have been compared to the costs.
But also, I mean, without wanting to put too fine a point on it, many people believe in PA Holdings that some of the judges involved perhaps had their personal opinions on it before the case started. So you might get to a point, and QC has said it'll definitely work, and you finally get to that particular room, that person walks in and the verdict doesn't go as you thought it might anyway.
Well, again, I think that's the danger of the purposive approach, because again, they are guessing at what Parliament intended. My view, and it may be cynical, is that Parliament probably didn't even think about it, wouldn't have understood what it was doing anyway, and maybe what Parliament intended is not what's ended up in the draft, because then you've got the parliamentary draftsmen who have to actually frame the law, and one would have hoped that in scrutiny they would have picked out and said, no, that's not saying what we wanted to say. But I dare say that most members of Parliament know nothing about tax and therefore don't understand what they've actually said. So I think the purposive approach is in itself flawed. But if judges feel compelled to stretch the interpretation of the legislation such, and Aronson does mention this in the original GAAR report, he feels that it's putting an intolerable burden on judges to come up with a decision which matches the mood. And I think that's wrong, because I think if it's the law, it's the law. But that's the way it's going, and I can't affect that, so we have to live with it, basically. So
the way to stop anti-avoidance altogether would be for them to get the law right in the first place?
I think the law is where we would start, but then let's look at what you just said, anti-avoidance. Now, avoidance is not illegal. Most people conflate avoidance and evasion. I once heard, I'm sure I heard Mr Osborne say on the television, illegal avoidance. Well, there's no such thing. Avoidance is legal. Aronson said in his original report that business people and taxpayers have the right to choose. Now, if you have two ways of doing something and one way would reduce your tax liability, I see no reason why that shouldn't be allowed. So I think it's become very emotive, this whole thing of anti-avoidance. We have specific avoidance legislation, and certain jurisdictions have very generally written avoidance rules. I think you've got to look to see what gives the best approach if you look at it objectively. What are we trying to achieve here? You know, the legislation says this, if we do it that way, or the legislation says this and this, and we choose the path that reduces our liability. I don't really have a problem with that. I really can't see why. Because I think there's a fundamental thing to remember here. Tax is an appropriation of our money. We are subjects, admittedly, but we also have rights. And it is our money first. And the state, or previously the Crown, would have appropriated that from us to do certain things with. Now, we may not agree with all the things that they do with that, and we don't really have a lot of choice because we have to pay our tax. But that doesn't mean to say that we have to willingly pay our tax if we think it's being misused for some reason. And I think if we can reduce our tax liability lawfully, because that's what the law says, then I think we should use the law. HMRC use the law to justify what they do. Where's the difference? Why can't the taxpayer do it? I really can't understand this, this dichotomy of that HMRC are correct in using the law, but when a taxpayer uses the law, they're being, morally reprehensible or something, I think.
But if a law is badly written, is it fair to use that to our advantage?
Well, if the law is badly written, surely it doesn't take terribly long for that to come to light and for Parliament to go back and write the law.
So looking at the two words that keep cropping up here, and it's quite an interesting way of looking at it. For our viewers watching this now, what is the difference in your mind between abuse and avoidance?
I think you've got to look at whether there's an underlying economic result that matches the tax saving. I think if you've got something, really you could look right back to Ramsey and Furness and Dawson. If you do something which is totally artificial, if you insert a step which in a normal commercial world you would not do, then I think that points to abuse. But if you just follow a normal transaction through, as I say, going back to Aronson, if there are two ways of doing something, and you follow the path that gives you the least tax liability, but all the steps that you take are commercial and understandable, then I think, and fair and reasonable, which is a word that crops up all the time, then I think that that is avoidance and not abuse. Mr. Aronson used the word egregious. Now, I had to look that up, I must confess, and it means absurd. Well, again, if you do something and you read it first time, you think, well, that's silly, why would you do that? Where is the economic argument or the commerciality? Then I think that points to abuse. But I think, again, these are subjective words. I think, in the end, one can try and be as objective as one possibly can. But if that's what the legislation says and you follow it, and it has got a commerciality behind it, then I would say that's avoidance and not abuse. But, again, fair and reasonable. My fair and reasonable might not be someone else's fair and reasonable.
Or a judge's fair and reasonable.
And a judge's fair and reasonable. Judges are subject to pressure as well. I think their move towards the purposive approach reflects the pressure on them to come up with a decision which society might agree with. But society can be fooled. I often say that HMRC have won the propaganda war in this instance. The fact that you've got certain people being pilloried in the press and on television, the fact that we've got major multinationals being held up to account, again, it's sort of like an hysteria. I wrote an article for AVN members in which I likened the hysteria to the Salem witch trials. Something's happening, everyone jumps on the bandwagon, oh, that's terrible, oh, that's terrible. These multinationals are doing this. And some of the people that are criticising multinationals may themselves be guilty of actually evading tax. It's a question of trying to get the genuine story out there. Okay.
So, thinking about the GAAR for a moment, there's this new rule coming in, and that's the end of you guys.
Oh, I don't see it in those terms, because for a start, I don't think our purpose is just to find ways of avoiding tax. We advise on all issues of tax. If there happens to be something which reduces a tax liability, then so be it. And then if you look at the GAAR, General Anti-Abuse Rule, we've now got to interpret how certain courses of action will fit in with the GAAR. I mean, it's not completely statutory. They are only going to make an observation on whether they think a course of action is abusive. There's lots of examples attached to the GAAR about what HMRC consider to be abusive. Now, that's what HMRC consider to be abusive. It's not as yet read that everything that gets put through up to the GAAR advisory panel will be considered abusive. Then you've got to say, well, if they don't consider abusive, what are HMRC going to do? If they're really exercised about something, they're not going to stop there. But when it goes to tribunal, then the tribunal must be they're minded to look at what the panel said. I think that there is always going to be scope for sensible tax planning.
Steve, thank you very much indeed.
My pleasure.
Now it's time for Admin Minute.